relative, whatever that you're in contact with, some proactive actions today with these market downturns that we've experienced so far this year. We have 4 of them to talk about. First off, it's an excellent opportunity to buy. And the savviest investors and clients that we have are buying right now. And again, we have another quote from Warren Buffett. I'll tell you how to become rich. Close the doors. Be fearful when others are greedy, and be greedy when others are fearful. That's the way Warren Buffett is. He invests rationally, not emotionally.
Yep. And these are all steps for rational, wise investors.
Right, right. And one of the kind of characteristics that I personally have is I don't panic. I just never have. I never have been a panic kind of person. I try to think. When I'm in a crisis situation, I don't panic. It's just something that God gave me, I think, and I've kind of learned, it's God-given and learned through my experiences and stuff. And I'm not panicking now, and I'm urging and trying to counsel you not to panic too. Another proactive action to take advantage of this market downturn, this is a great time, if you're financially able to convert traditional IRA money to Roth. You know, a traditional IRA has a certain amount of money in it, and we look at that money and we look at our account and we think, well, that's all our money, but it's not. Part of that money is an obligation to pay taxes on. So let's say it's a $1 million IRA, and you think, well, I have $1 million. Well, you don't have $1 million. You have $1 million IRA, 300 or 400,000 of which you would have to pay to the federal government if you cashed it in. Or maybe to make it a little more reasonable for a conversion, let's talk about $100,000. $100,000, because you don't have to convert an entire IRA to Roth, you can convert parts of it. And we had some people do this back in the downturn of 2020. Some people right at that bottom took advantage of that and converted IRA money to Roth. And so let's say they had a $100,000 IRA, they converted it to Roth. It had been, before the market downturn, say $130,000 IRA, went down to 100, they converted it to Roth. They caused themselves a tax liability of say $30,000 federal and state that wasn't due until April 15th of the next year. So it was a year away yet. And then when the market recovered, their account value was all tax-free. You got to leave it in for 5 years. And this is certainly a little bit, you know, there's a few ins and outs of it, but you need to have money from outside the IRA in order to pay the taxes in order for it to work right. But this is a great time to convert traditional IRA money to Roth IRA rather than leaving that money sitting in the bank losing buying power that you would pay the taxes on. And then we already mentioned a third proactive action is not to panic. And then the fourth is to focus on the long term. For most of our clients that have money in the stock market, you should anyway, if you have money in the stock market and these types of investments, they're long-term investments. There's going to be market fluctuations. And unless if you can't tolerate market fluctuations, you shouldn't be invested in the stock market. But if you can't tolerate market fluctuations, you're going to be stuck at earning relatively low interest rates of 2 or 3 or 4% at the best. You know, and with this inflation and rising interest rates may go up, so, you know, to where they're really attractive again. But after taxes and inflation, fixed interest investments always lag behind it. You always lose buying power after taxes and inflation.